Hello and welcome is the midweek edition of Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. About £1 trillion, that's what is said to be needed to rebuild the assets destroyed in Lagos State. The Speaker of the House of Representatives, Femi Gbajabiamila, made this known over the weekend during a visit to Lagos State to inspect the level of damage done from the vandalization of public and private properties. Aside from the Speaker, the governors and ministers from the southwest states also paid a visit to the state governor and described the vandalization of the assets in Lagos as a coordinated attempt to weaken economy of the region. Let's watch this.
One after the other, governors of the southwest states arrive at the Lagos House Marina to commiserate with their colleague, Governor Babajide Sanwo-Olu, who is most troubled about the level of destruction in the state by rampaging youth who took advantage of the EndSARS protests. The governors were not alone, as some ministers from the southwest region are also here for the same reason. After a brief discussion and a glimpse of some damaged property, they proceed to the street to see things for themselves. The first port of call is the Igboshire High Court.
Okay, I didn't even know that Olumide is here with us. I thought you were also a prophet. I saw you a week ago in Abuja. Why didn't you foretell this to me?
Then the Nigerian Port Authority building, as well as the State's DNA and Forensic Center. And finally, at the Lekki Toll Plaza, where Mr. Babatunde Fashola believes he has found evidence that will be useful in investigating the Lekki shooting. Afterwards, they head back to Marina, appealing for peace and assuring the public of bringing the perpetrators to book.
Would we be right to say Lagos was turned to a war zone? Because the damage could not have been worse than this if we were at war. The vile manipulation by elements keenly anxious to annihilate Southwest and destroy our common heritage must be condemned, and we condemn it. We charge relevant security agencies to investigate all cases of violence with a view of identifying the culprits and bringing them to book.
We are sure that all will be well. For all to be well, we appeal that we should refrain from volatile, provocative, inciting messages and language, so that we can then stand away and begin what I believe will be an investigation which the federal government is also supporting and which the state has started, that would really help us unravel how we got here.
The Speaker of the House of Representatives also came calling, and he describes the destructions as a setback for the country's commercial capital.
The governor was telling me just now that it was going to cost about ₦1 trillion to rebuild Lagos. That makes my heart heavy. In Nigeria, I never thought, where we are today, having come this far, that we'll be talking reconstruction again in any state. But that is where we are where we are. What needs to be done will be done. But I want to encourage our young men and women out there. You fought a good fight. And I'm sure deep down, you are not happy with what you have seen. The judicial panel has been set up. And I hope those who say, this is what happened, will have the courage to go before the judicial panel and say, this is what happened, and give credible evidence. And if that was indeed what happened, then the law must take its course. If that was indeed what happened, the law must take its course. But if that was not what happened, the law must also take its course. Either way, the law must take its course.
With assurances from authorities, Nigerians will be waiting to see how things unfold in the next few weeks, with hope that justice is served.
And while the affected states and indeed Nigeria continue to count their losses, the question on the lips of many is, how do we ensure going forward situation like this will not occur? How do we begin to rebuild for better economic development? Let's have this conversation with a development economist and the chief strategist at Westphalia Resources, Joe Femi Daguro. Thank you very much, Mr. Daguro, for joining us on the program.
Good morning.
Good morning. Well, let's begin with the extent of damage to the economy and, of course, assets. What's your assessment?
Yeah, first of all, my condolences to the families that have lost their loved ones and those people as well. My heartfelt condolences to everyone, not only in Lagos, but all around Nigeria. Now, this is something that we have to begin to evaluate. It's going to be about 1 trillion. We are yet to have a data to know how the essence of these damages, and it's going to cost a lot of money. I want to believe that most things that are public liability insurance, things that will be able to compensate them, and this is where it's going to be a heavy load, a heavy burden on the government. But we have to look at certain things in this country. This is not the first time we'll be having some growing properties and lives and making things difficult for people. But we have to look at some other areas as well. I think this is high time we begin to look at compassionate capitalism in this country. Compassionate capitalism, whereby capitalism is for the people to profit from it as well. That is, we have to begin to invest in people directly. We have to begin to fund people because there's no any people have to learn to test for it. They've done it. Yes, we all agree that they've done it, they've made their voice known, and the government is looking at it. But then, if it is not just because of NSAS, it has a lot of other things that we are looking into. They are even demanding better packages for the policemen. So this is something that these hoodlums have hijacked, and they have turned into something different. And beyond that, it is still going on in some states, whereby the palliatives have been hijacked, and they are doing a lot of other things. Going forward is where we have to begin to look at our.
Well, I guess it's one of those days that the network can actually disappoint, but we'll try to get back to Mr. Daguro to continue with this conversation. In the meantime, the federal government says it has commenced implementation of the Economic Sustainability Plan with a payment of 30,000 Naira grant to 333,000 artisans across the country. A statement from the Office of the Vice President explains that the payments are being made to sets of verified beneficiaries of the Artisan Support Scheme, a track under the Micro, Small and Medium Enterprises Survival Fund. The beneficiaries are being drawn from the FCT, Lagos, Ondo, Kaduna, Borno, Kano, Bauchi, Anambra, Abia, Rivers, Plateau and Delta states. The federal government's 2.3 trillion Naira Economic Sustainability Plan consists of fiscal, monetary and sectoral measures to enhance local production, support businesses, create jobs and provide succor to Nigerians, especially the most vulnerable. All right, we're back to Mr. Dogoro on the conversation on the way forward. How do we begin to rebuild the economy? Well, back to you now, Mr. Dogoro. Yes, you were talking about the need to invest, social investment, basically. Yeah, when you talk about social investment, what sort of social investment are you referring to? What sort of social investment do you think can be channeled towards this cause?
Well, first of all, let's begin with affordable education for all. Like I said, some years back, and I have said it, most of the people that are in government today that are my age group, between the ages of 45 and 65, they enjoy bursary, they enjoy scholarship, they enjoy all these good things. Even while I was in teachers' college, I was having a monthly stipend of about 8 naira then. But now we begin to see that most of these things we are enjoying have been cut off. You tell these young people the story of it was good in those days. It was good in those days. Who are the people that make it happen? And then they said the labor of our heroes shall not be in vain. If Awolowo does not depend on oil to be able to make free education possible, he didn't depend on oil to be able to make free health affordable. So we shouldn't be depending on some of these things. It should be something that will make the people to live a happy life. Businesses are meant to make profit, but the profit should be able to profit the people on the street as well. If we begin to see that the businesses are making profit to profit us, then everybody will be able to support those businesses. All consumers should be ambassadors of what they consume. But the point is this, you see, people who cannot afford education, who cannot afford good health, you can imagine a woman that goes into the hospital and cannot even afford to pay for delivery of the baby and being sent away. And along the line, what happened? There are a lot of things. We all know the problem in this country. We know the problems. Ask anybody. But then, where are we going? We are running budget that is on deficit, every year deficit. When are we going to run a surplus budget? So we have to begin to look at it that more has to be done in the area of compassionate capitalism, whereby the people will feel they are being carried away, carried along with it. People will feel they are being thought of. People will think, yes, my government is thinking of me. The people around are thinking of me. These are the kind of things we begin to have it. Let's bring back bursary. If we have, for instance, a Lagos state, I don't know how many people we have that are just in a higher institution. Let's give it, for the purpose of this interview, if they are just 100 or 200,000, and you pay them 10,000 monthly, you'll be running a budget of about 2 billion to 1 to 2 billion to pay these people. It will help them. And if we have affordable health insurance for everyone, nobody should go to the hospital in Nigeria and should not be treated, whether you have money or you don't have money. These are the things that people will begin to see that we care for them. There's no point. We have money, trader money, we have all these things that are not being coordinated well. Let's have a statistics. Let's begin to have the system that was working for these people before, where they have cooperative societies. Let cooperative society be established in all the wards. If you take Osofre local government, let's have cooperative society in the world, Jota, in Alakpara, and wherever, so that people will have this financial inclusion. That is what they understand. That is what they understand. And at the same time, you are saying the youth have to have the opportunity. Listen, those who are just 17 that are 18 this year, they cannot vote because they've not been registered. So there are a lot of things we have to put in place. This is an eye-opener. This is an opportunity for us to say, we have made mistakes, but let's begin to correct it. It is not a point now of making a blame game. This is not just blaming the game. This is not about just setting up committee. We have to be proactive. These people want something from us. They demand it and they need to get it. We all enjoyed it. I enjoyed it. You enjoyed it. Maybe every other person enjoyed it as well. Most people in government today, they enjoyed it. Governors, they enjoyed it. Most of us did not attend private primary school or private secondary school or private university. We enjoyed those things and we have not been able to bring back those things. And it's a shame. It's a shame. And we cannot continue to allow this thing to go. These kids, these young men and women, they don't need to lose their life to be able to demand for this thing. They don't need to lose their life to be able to do this. But now, like I said, let's begin to compile all these things, have statistics, number one. We have to have statistics. We have to be able to know how much damage has been done, what will be the cost. I believe we still have to borrow. See, most of the things we do, most of the states, they are borrowing and borrowing and borrowing. The government is borrowing, the federal government is borrowing and borrowing. When are we going to stop borrowing? When are we going to begin to run our economy? If all economic theories have failed, let us go to try to economic theory, where people know what to do and how to do it. These people, the old people, they've been doing their contribution, and they know when to collect their contribution. They know what interest to pay. But we cannot continue like this and be talking theories. It is a shame that we cannot do something right. But let's begin to do it right now. Let the young people begin to see that they can do it. I tell you what, Chimeze, listen. Some few weeks ago, you see two young men. They brought $200 million into this country. Paystack is the name of the company. These people, they don't have big offices. They were not born with silver spoon, but they'll be able to use their own brain. $200 million, multiply that by 400. So that means the youth in this country, they can offer something. You can see, nobody was able to predict that internet will bring e-commerce. But today you have young people running Jumia. You have a lot of them doing all these things. We have to encourage them, provide a level playing field for them. And this is what it pains me to see that we are not doing much. And we continue to look overseas for people to come and help us. No, these people don't need to beg. They're not begging anybody to come and help them. They want just to have the freedom to be able to do things right. Look, I'm not saying the fact that we not have some criminals among them. I don't tolerate that, and we shouldn't tolerate criminals among them. But until we begin to do the right thing, the criminals themselves, they'll phase out. They will change their mind. We have to show love in businesses. It is not just enough that when we do all this one-time thing of saying, buy this and get this, buy this and get that, you are using their money to feed them back. They understand it now. When you say somebody should buy a bag of something to get 1 million, he knows that 1 million people will get that, and from that 1 million people, you are giving them just 10 million. People are not fools again. Let's begin to do the real thing, and so that the people will see that, yes, we are going forward. It is not about long theory.
Yeah. All right, Mr. Doguro. Yes, one major point you made there is the fact that the government needs to invest in its education, needs to invest in its health sector. Now, talking about education there, yes, it's part of the social investment we're talking about, because education, I know, is a social service. But then the government takes to the fact they have other programs they can use to, encourage these youths. For instance, the Youth Investment Fund, which was currently launched by the current administration. What do you make of this as a way of going forward? I mean, having this Youth Investment Fund to encourage the youth entrepreneurs who have ideas, to come up with it.
Yeah, I tell you what, it's a good program. There's no doubt about that. Nigeria, we have so many beautiful programs. But what about the execution of the program? What about the evaluation of the program? What is the statistics we are going to use now to begin to dish out this fund to the people? You see, when you say, the government will say, okay, you can go and register your company free of charge now for the next 90 days or 30 days or 60 days. Fantastic. But then we need to provide opportunity. We need to have statistics for people to know, how do I get this money? It is the bureaucracy that will follow up. What are the criteria is listed there? But I tell you what, most of these people, the young people, they want to have something that is on the go. Yes, and government has to, the government has to understand this philosophy. And that's why they've given themselves a name, Sorosoke. You see, when they have that, they want to, Sorosoke does not mean only for them. We all have to speak up, and we have to make our voices heard as well. So Sorosoke in terms of business now, push your business up as well. I gave you this example of people who are going around and raising funds for themselves. Look at the agriculture. Most of the young people in the agri area, they've come up with agri-invest, bringing fintech, technology into agriculture. Unfortunately, this pandemic messed some of them up. They can't pay as and when due. But you have seen they brought their own initiative into it. That is, you can invest. You don't even need to be a farmer to invest in farming. So there are a lot of opportunities. Before we launch all these programs, let's involve these people in the program in the planning. We have to involve them in the planning. We can't just sit down as a 67, 78, or 50, or whatever age, and say you are designing a program for a 30 or 20-year-old child. No, it is not possible. The system has gone beyond that. So involve them to know what area are we going to disburse this fund. Is it technology? We cannot disburse the fund as a go to all the sectors of the economy. No, we have to pick it sector by sector to evaluate it and to see that it works, and then avoid bureaucracy. Once bureaucracy is not in there, I think these people are encouraged to go online and fill forms again. People are not encouraged because they say, those people who fill the form, what happened? Then the next thing you hear the government and say, we have another program. We have not concluded one program, you are launching another program upon program upon program. No! Let's do one and succeed with it. Let's take it to the grassroots. Let's begin from the local level. I've always been saying it. You cannot continue to design program in Abuja and do it in Abuja. No. Let each and these local government, what are they doing? Do we have a functional local government precisely? If we don't have it, let's refine it. Let's reform it.
Okay. Thank you very much for your time, Mr. Joe Femi Daguro. Thank you for sharing your thoughts on the program. Mr. Joe Femi
so much. I
Daguro
appreciate it.
is a development economist and the chief strategist at Westphalia Resources. We'll take a break, and when we come back, we look at the outlook for corporates as earnings seasons kick in, even in the midst of the unrest. To stay with us. It has been an interesting time for traditional asset classes in Nigeria, despite the apparent macroeconomic and political challenges facing the country. The bonds market has been on a gaining streak as yields continue to fall on the back of rising demand and paucity of supply. S&P FMDQ Nigerian Sovereign Bond Index has returned 55.3% year to date, with no noticeable change in trend envisaged in the near term. Similarly, the equities market continues to enjoy tremendous buying interest as most investors are now turning to equities given the continuously depressing yield environment. Interestingly, the third quarter earnings season has just begun, with early announcers such as Lafarge, Flour Mill, Nascon, and Stanbic IBTC posting quite impressive results, suggesting that the current bullish momentum may be sustained. Joining me now to put some perspective into the third quarter earnings season and the overall financial market performance is the head of research at United Capital, Olaoli Olusi. Thank you very much, Wale, for joining us on the show.
Morning, Chimeze.
Good morning. Well, different investors seem to view the current market situation differently, given that what has been happening in both the bonds and equities market. The two markets have been on some bullish run for a while. What's your assessment of the situation?
Okay. Good morning once again, Chimeze. Thank you for having me. I think, beyond all that has been happening in the economy, there's a peculiar case for, the Nigerian financial markets. And that has to do with the unorthodox monetary policy of the central bank. That has resulted in a huge amount of liquidity in the system and an extremely low yield environment. So what that means is that there's a lot of cash in the hands of both institutional and portfolio investors, as well as individuals, actually, HNIs and those who can afford it. But investable assets, especially those ones that are safe or risk-free, they are very, very limited. Government is offering about 1-2% for treasury bills. 10-year bond yield is doing about 10%, 8 to 6%. A lot of foreign portfolio investors are stuck in Nigeria. They couldn't take out their funds. So because of that, they are left with no choice but to either buy the bond market or the fixed income instruments the way they are or at current rate, or they continue to bid for it, which resulted in continuous low yield environment, or go for assets that are a little bit more risky. And that's what has led to the rally in the stock market. Year to date, the Nigerian stock market closed about 8%, up yesterday, yesterday. Perhaps the best performing stock exchange in Africa, as well as if you compare it to emerging market and frontier markets. And then we've seen a lot of rally in tier one banks, among the cement players, as well as the tech giants in the economy, despite all of the social unrest that we saw last week.
Yeah, and just as you have noted, of course, the equities market particularly seems to have benefited from the low yield environment in the fixed income market. Now, are investors just considering alternatives at this time, given that the Nigerian equities markets is one of the best performing in frontier markets, as you just noted, at this time with a current year-to-date return of about 8%?
Well, I mean, I need to say that investors they aren't stupid. They are not just running to the equities market because they don't want the low yield environment in the fixed income market. They're actually very, very particular. Like I mentioned, there's a select universe of stocks that they are looking at. Like I mentioned, tier one banks. The bulk of the best players in that sector in the banking industry, their dividend yield is about double digits. Now, put a Zenith or a GT or even a UBA, side by side, 10-year bond. That's doing about 10 to 12% dividend yield. Meaning if you buy any of those stocks today, in about 6 months from now, you get about 10 to 12% dividend yield. Now, if you annualize that, that gives you about 24%. That makes more sense than putting your funds in government bills that are paying about 8% or less per annum. In fact, some 364-day bills are doing 2 to 3%. So I think those are the reasoning behind the rush for equities. Even some of the cement players, that's what we've continued to see. Dividend yield is one big driver of the demand for equities, beyond the need to avoid the low yield environment. I think it's just investors following the money.
Yeah. So are you saying that the current fundamentals of the company support the current positive momentum we're experiencing in the equities market, or is it that a bubble is brewing in the market?
Okay, I mean, you can call it, a bubble. You can question the fundamentals of the Nigerian economy as a whole. But don't forget, even before the coronavirus outbreak that led to the crash in March, the Nigerian market itself has been considerably undervalued because of the preponderance of a double-digit yield in the fixed income market. So it just made more sense, as at this time last year and before, to stake your money in treasury bills of 6 months to 1 year at 12% or more, or even buy a bond of 2 years, 3 years that are doing 14, 16%. So the stock market have been undervalued as a result of that. But with the crash as at March of this year, stock prices actually fell to record levels, and dividend yield became much more attractive. Now, if you want me to speak to the fundamentals, I will take the tier one banks, for example. When we saw their second quarter results, when we analyzed it despite the coronavirus outbreak, we expected, it was clear that so many of them were still going to be able to pay a decent amount of dividend, because even with all the pressure, their profitability remained very, very strong. GT Bank is probably going to do about 200 billion in profit by end of the year. Zenith Bank is perhaps going to do the same thing. Access Bank, UBA, and First Bank, they are all going to do PAT in excess of 50 to 70 billion by the end of the year. They may just be able to maintain their dividend as of last year. Now, if you go to the cement operators, something similar is happening to Tanksem. These are companies that are extremely profitable. Yes, the pressure on the economy will slightly hurt their revenues, but their profitability remained quite resilient. And the fact that they will be able to pay dividends clearly give investors the reason to just go for them instead. And that's why prices have been rallying so far.
So in all of this, which sectors have been the clear winners from your perspective, and what will be your outlook for those sectors for the rest of the year? I know you did mention the banking, you mentioned the cement, sector, which is of course the industrial sector.
Correct. So apart from the banks, apart from the cement companies, which have seen resilient performance, I mean, WAPCO just published, and it was very, very impressive. The consumer goods, the food-related consumer goods company, the food processors basically, are also showing strength. We saw the flour mills results. The agri segment of their business actually came in very, very strongly based on what we got from management as of yesterday. Don't forget, there's a lot of policy that supports our Greek operators, including the palm oil producers, Okomo and Presco, the border closure, all of the policy interventions of the current administration in favor of the agri sector, and the demand for food, because we need to eat. I mean, we all saw the palliatives. All of this came from food processors. Look at the amount of Indomies that are stockpiled in many warehouses. These things, some of them would have been paid for, some of them will be donated. But that tells you that food remains a major component of what we need to survive as a people. So the food processors are doing well. The telcos, data connectivity is driving revenues among telcos. Airtel has jumped over 400, to over 400 naira per shares, as a result of what we've seen. I also think that with the reform in the downstream oil and gas sector, we've also seen some traction in the downstream sector of, the oil and gas sector. Many of the prices there have also rallied. We saw Etana Oil and a few others earlier.
Okay, it's earnings season, and we have already started seeing some positive earning releases from few names in the consumer and banking sectors. What are your broad-based expectations for the third quarter earnings, or would you say the numbers seen so far have been real growth, or are they induced by the currently mounting inflationary pressures?
Okay, so I mean, I'm going to take it, sector by sector. For flour mills, like I mentioned earlier, food processing, agri, feed. They have a premier feed company in Ibadan. They have fat and oil businesses. There's a gari processing company amongst all of that. These are the volume in each of these businesses actually grow as a result of what is happening in the agri space. Their flour business is also doing quite well, so that I don't forget that. So apart from price increases, we also saw, a surge in volume growth. And flour mill did the best. They reported the best performance in the last 4 to 5 years, as at their half-year result that was recently released. For WAPCO, yes, revenue growth was there, but their bottom line, their profitability was significantly supported by reduction in finance costs. Remember that I mentioned that the fact that low yield environment, is boosting interest in equities. But that also means that corporates who want to raise capital can raise it at, a very cheap rate. All you need to do is to add, 200 basis points to what government is doing to treasury bills, and you will be able to do a commercial paper at about 4 to 5%. That helps you save a lot of money. And if you can increase your, productivity as a result of that, the leverage effect on your profitability is huge. For Stanbic, we also saw solid numbers from Stanbic. Their wealth management business, their pension business, their fees from asset management supported their earnings, even though they are not so big in banking, but we continue to see strength. So what this means is that it looks like there's a pent-up demand as a result of the coronavirus that is supporting Q3 numbers. And, if we adjust that for the event of the last 3 weeks in the social economy, many of these companies are likely to do, very well as at full year. But, the event of the last 3 weeks is significant, and it may hurt demand, because some people will also lost their job, at least temporarily. We also want to see, the size of those losses that the insurance company will be able to absorb, and the number of companies that will be able to take the intervention fund from the government. But this will have some effect. But on a whole, we think the bulk of these companies in Nigeria will remain resilient from what we've seen, especially because interest rates are low. That will support their earning, especially the banks. The banks are going to lose a lot of money in terms of revenue from interest income. But the gains from interest expense that has reduced from government bonds, from treasury bills, from OMO, as well as from savings rates that were all reduced, will support the banks a lot. So they will remain resilient. So, the outlook remains broadly optimistic despite a lot of pressure in the economy.
All right, thank you very much, Wale, for your time. Wale Olusi is the head of research at United Capital. Thank you for your time. All right, let's look at Tuesday's activities at the equities market with Edidion Ewang. Eddie, the rally continues.
Good morning, Jimmy. You're right. The bullish sentiments continued in the market yesterday, and that was largely due to interest in the banking sector and bar cement. The all-share index was up 0.70%, and just like Wale mentioned, the month-to-date and year-to-date gains is standing about 8%. Got up to 8% yesterday. The all-share index was at 28,980.29 points. If we continue this way, we might just get to the 29,000 level before the end of the week, while the equity cap was at 15.147 trillion naira. Activity was mostly positive yesterday. The volume rose by about 13% to 385.59 million units. However, value declined by about 40% to 2.91 billion naira, and all of that was traded in 5,283 deals. Sectoral performance was positive yesterday. The banking index was up 2.16%. Interestingly, only Wema Bank declined, and then about UBA and I think UBA and Unity Bank were unchanged, but all the other listed sectors posted gains yesterday. Consumer goods was up yesterday. That was due to gains from Cadbury, Flour Mill, Guinness, and Vitafoam. Speaking about Flour Mill's earnings yesterday, investors reacted positively to that, and the stock jumped about 9.50%. Industrial goods was up 0.45%, and that was largely due to the gains we saw from bar cement. Insurance was up, while oil and gas was up 0.82%. And that was due to the gains from corn oil and Oando. But let's talk to Kayode Olayemi, a stockbroker at CSL Securities. Good morning, Kayode. Thank you for joining us on the program.
Good morning. Thanks for having me.
Well, let's talk about Flour Mill's earnings now. Yesterday, the company released impressive earnings, and we saw the stock jump up by about 9.50%. What stood out for you in the earnings, and are we likely to continue seeing interest in that stock today?
Okay. So yesterday they released their numbers, and the numbers sort of beat our estimates, top line estimate by about 17%. And like you said, that pushed up the stock to about 26.50 thereabouts, which is about as high as since August 2018. So looking at the numbers, I mean, it was broad-based growth across all their business segments, driven by their agro-allied business, which basically does edible oils and fertilizers. Support services were also strong as well. From the report, the numbers were driven by new products and investments in their business-to-consumer channels. So very, very strong numbers from them. And I think that we'll continue to see that stock gain some more in the next couple of sessions. I mean, there's interest in that space. So I think you should see that stock continue to appreciate. At the moment, it's still trading at above where it closed yesterday. So looks good for a positive close today again.
Let's talk about the banking sector now. Yesterday, almost all the lenders posted gains, apart from Wema Bank. And do you have any idea what drove interest in the banking sector yesterday?
For Nigerian banks, even in spite of the recent rally we've seen, they're all still trading at depressed levels. And from a valuation perspective, they're all very cheap, especially when compared with their peers across Africa. So we're definitely going to keep seeing interest in these banks from time to time, particularly with yields at very low levels. Local investors would have to switch into equities and the Nigerian banks in particular. So that should continue to support gains. And that's what we saw yesterday, investors looking to get bargains from the banks.
All right, Kayode, thank you for your input on the program. Kayode Olayemi is a stockbroker at CSL Securities. We'll have to leave it there on the market review for now. Over to you, Chimi.
Well, we'll do an opening call to London as well as come back to you, Eddie, for the debt and currency market after the break. Well, Juliana is on standby to bring us up to speed with developments in the UK. Good morning, Juliana. Well, let's begin with Brexit Talk. The head of the UK's leading employers organization, CBI, will be stepping down next week and has parting shot, she has called on the government to conclude trade talks with the EU so that the country can move on from the suspended animation of the past 4 years. Talks between London and Brussels have intensified in recent days. What's the latest?
Well, unfortunately, there isn't a latest. What we know is that a deal hasn't been reached. Talks are ongoing. Michel Barnier, the EU's chief negotiator, he has been in London, and I believe that he'll be staying until tomorrow to try and thrash out some sort of a deal. I think both sides are being pretty honest and open about the fact that it is going to be very, very difficult. There still remains lots of bones of contentions. I think mainly fisheries. The EU still want to have complete access to Britain's fishing waters. They're also a little bit concerned about the state of play and competition and whether or not the British government will be subsidising and basically topping up British companies so they can compete unfairly against EU companies. That appears to be the main state of play. Of course, a couple of weeks ago, we passed that October the 15th deadline, that self-imposed deadline that was put in place by Prime Minister Boris Johnson. I think the EU had hoped that negotiations would wrap up this weekend. Sources close to the matter do say that it's likely to be in the middle of November. But, we just don't know. A week ago, it appeared as if negotiations were over. That was the kind of sentiment we were hearing from number 10 Downing Street. But talks are ongoing. A deal may or may not be done. Only time will tell. So we'll wait to hear an update from Prime Minister Boris Johnson.
And in the meantime, the Confederation of British Industries monthly retail sales index fell to -23 in October, its lowest level since June, after hitting an 18-month high in September. What happened?
Well, what happened is people stopped spending. I think there appears to be a culmination of issues. I think these new restrictions are really hitting people hard. You can go out, you can't go out, you can do this, you can't do that. Government's support scheme is coming to an end. I think a lot of people are being pretty cautious about what they're spending. They don't want to spend too much because they're scared that they may not have money coming in at the end of each month. And also as well, Christmas appears to be almost but over. This rule of six, the Prime Minister has said, may indeed last until the end of March next year. So at this type of year, when we are expecting lots of people to be stocking up Christmas goods and buying outfits for Christmas parties and drinks after work, people are just not doing that. And this has been reflected by the flash PMI data. This has also been reflected by the Confederation of British Industries survey released today. And we've also had other data that does indicate that even though there is growth is still slowing, particularly at the time of year for Q4. And of course, Boris Johnson has been asking people to stay at home, and the retail, the high street here in London does rely on people buying and spending after work and during lunchtime.
And Woolworth's High Street relaunch turns out to be fake news. How come? What's the true situation?
To be honest with you, Chimese, I missed this story. I do try my best to avoid fake news, and I didn't actually even know this existed. But according to one or two news outlets, a fake Twitter account that was even spelt incorrectly did say that Woolworths would be opening 3 stores next year. A couple of news outlets picked it up. As we know, working in the media, sometimes you've got to be very careful about reporting on fake news. But it was very quickly dismissed. They're a massive company that own the name Woolworths. They released a statement saying it wasn't true.
Well, I guess that's what social media does sometimes. Thank you. We expect to have more update from you later in the day. And back here on the debt and currency market, we have Eddie back. Eddie.
Thank you, Jimmy. Well, it seems like the positive sentiments are trickling into the unlisted securities market as the NSI was up 0.54% yesterday at 740.74 points, with the market cap at 544.12 billion naira. We saw 55,125 units worth 1.41 million naira traded in 3 deals. Now, the bond market, the bullish run at the bond market came to a halt yesterday as average yields declined expanded marginally by 1 basis point. We saw increases in yields across the curve, while the short end was flat. We saw increases in the 26th of September 2049 maturity and the 27th of March 2050 maturity. Yesterday, we had 48 deals worth 32.33 billion. Now, the Nigerian Treasury bills market was mixed yesterday, although with a bearish tilt as we saw yields increase on the long end of the curve. We had 15 deals worth 6.09 billion naira, while the OMO market was flat yesterday. We had just 10 deals worth 13 billion naira. But let's talk to Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thank you for joining us on the program.
Good morning. Thank you for having me.
Well, attention of investors at the Nigerian Treasury bills market was focused on the primary market auction today. What should we be expecting from that auction?
Okay, for the auction, we have 134 billion on offer against trade tenors. The last top rate, the last high yielding rate was 2%. With the level of liquidity we have in the system, over 800 billion is in the system, and we expect that there will be moderation of yield across the tenors offered.
The bond market has been bearish for the longest time now, and then yesterday we finally has been bullish, I beg your pardon, for the longest time, and then yesterday we saw that market turn bearish. What's responsible for that, and is it due to excess liquidity in the system?
Well, I think it's basically profit taking. The rates traded at 1% to 6% across the tenors in the bond space. So we've seen a lot of investors trying to take profit at that space. That was what caused the bearish deals. But with the liquidity we have in the system, the market is going to trade sideways in that space, which is with more of a bullish trend across the tenors.
Well, it's midweek trading. What should we be expecting for the rest of the week in the fixed income market?
We expect that the bullish trend with weakness over time will continue because of the liquidity we have in the system and because of maturities we expect. So we see a lot of investors trying to, invest the excess liquidity, hence the bullish trend we anticipate in the market.
All right, Choma, thank you for your input on the program. Choma Udu is a fixed income dealer at GT Bank. Well, just before we end the market review, I'd just like to point out that at the OMO market yesterday, we saw a lot of sell pressure at the long end of the curve, and the 16th of March 2021 maturity saw the highest sell pressure with yields at 1.80%. We had 10 deals worth 13 billion naira in that counter. But Chimi, we'll keep our fingers crossed and hope for a positive trading day, and we hope that these bullish sentiments we've seen continue for the rest of the week.
In both markets, the fixed income, the equities market, the FX.
Yes, especially the FX market.
Absolutely. All right, thank you very much, Eddie. Well, just before we call it a day, the Purchasing Managers Index of Nigeria's manufacturing sector has fallen for the 6th consecutive month after contracting to 49.4. According to the PMI survey report for October, which was released by the central bank, the latest reading indicates slowing contraction in the manufacturing sector, which started since May this year. Out of the 14 sectors surveyed, 7 subsectors recorded expansion above the 50 points threshold in production level. 1 subsector maintained current level, while 6 subsectors recorded declines this month. Meanwhile, the PMI for the non-manufacturing sector stood at 46.8 within the month, indicating its 7th consecutive month contraction as 11 subsectors declined, while 3 subsectors reported growth out of 17 subsectors surveyed. It's not really looking good there. Anyway, on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimizi Obi Iwago.